How to play earnings plays. I get asked often, what's your secret? What's your proprietary system to earnings plays? I'm not going to tell you. Okay? There's some things I share everything with you guys. You know that. I do have a system. It's far from fail-proof. But it has made me a ton of money. There are some things I look for, patterns. I look for revenue growth. I look at analyst expectations. I look at, what funds are invested in the stock. Do they have what would be a full position, or is it just a partial position? I look at the short interest. I look at about 10, 12 different data points, 4 or 5 of which I won't share. I look at a lot of stuff. I put it all together. My system flags stocks that are poised to move on their earnings report. Most stocks move on earnings, some up, some down. We're batting a little better than 55, 60% winners to losers. Actually, it's not winners, it's not losers to losers. Okay? If you take a shot at an earnings play and you don't lose any money, but you don't make any money, to me, that's a win. You had a shot to make a huge amount of money. You didn't lose anything. You were in it for a day or two, maybe a week or two, but you move on to the next. Every single publicly traded company has to announce earnings. I love earnings. We start looking in the playbook videos, we start looking at stocks that are coming out with earnings in 2 weeks. Because in a perfect world, you'll have a stock that's pulled back to a support level, an area of support, 2 weeks prior to earnings. So we'll jump in then in anticipation of a pop on the earnings play. If the pop doesn't come and we're still break even, we could get out. If we run into earnings, because a lot of stocks, a lot of people expect them to have big earnings reports. Apple being a perfect example of one of those companies. When they come out with earnings, the stock could really move. So if you buy them 2 weeks before earnings and then they start running into the earnings report, you could jump out before the report, and then not take that risk of, getting caught in a gap down. So there's 2 different ways. We throw an earnings play in an earnings playbook. We want it to be on your radar. If the stock's in a logical area of support, you could buy it in anticipation of the earnings coming in the next few days to 2 weeks. If the stock is extended too much, like Acme Packet, let's say Acme Packet's coming out with earnings in a week. There's no support up here. This stock's more inclined to sell off. I wouldn't chase it up here. But if I know the earnings are coming in a week or two and this stock starts pulling back into that earnings report, then I'll use that pullback or weakness as a shot at the earnings play. Earnings move stocks. It's that simple. A lot of people fear earnings, and that's because they should. They're very volatile time. A huge chunk of a stock's move can be on an earnings release. Acme Packet, for instance. They came out with earnings right here on February 2nd at the close. The stock closed at $10.67. Next day it gaps up, goes to 14, closed at $13.59. It's a 30+% move for the stock in a day. The next earnings cycle, $4.29. Right here. Stock closed at $21.07. Bam, next day, $27.73 high, 26 last trade. Another huge move. $7.29 right here. Stock closed at 32. The next day they come out with a great report, but it wasn't good enough. Stock's 28, huge gap down. You got an earnings report here on this gap up. Earnings report here on this gap up. Earnings report here on this gap down. And then most recently on the 28th, here we go. On the 28th of October, you got nothing. Kind of did nothing. So every quarter is different. The overall trend of the market will affect how stocks are during earnings season. If you've had a prolonged bear market, a good earnings report could catapult the stock higher. If you're in the tail end of a bull market, a good earnings report might give those investors that have ridden it all the way up, like Acme Packet recently, a good earnings report might give them an opportunity to get out, into that assumed strength. We're not going to get into all the details of what we look for because quite frankly, I'm not going to share my playbook. It's the one thing. I share everything with you guys, but I share tidbits. I provide what my system picks out. You guys could choose to follow it or not. You're going to be wrong half the time. You're going to lose money half the time. Sometimes when you lose money and you miss an earnings play, the stock can gap down huge. Smart Technology, SMT. Stock was sitting here, great. Guess what came out this day after the close? Earnings report. Stock gaps down. One day it's 13, next day it's 8 and change. That's the kind of loss you could take with earnings. That's why we recommend you use options to trade earnings. You can buy the calls if you think the stock's going to go lower, because we have stocks that we have as shorts into earnings plays. International Speedway Corp was a recent short. We had earnings right here. We had as an earnings play. We thought the stock was going lower. We caught this whole move lower here. We did the same thing right here when they announced their earnings. Played the options, made a ton of money. First Solar, FSLR, had earnings right in here. We caught this sell-off here. And we had an earnings play back in here too. And we caught a huge sell-off in their earnings. So, you think the stock's going down on the earnings, you buy the puts. You think it's going up, you buy the calls. That's 101 basics right there. But which calls? That depends on you. Okay? Chipotle Mexican Grill. Chipotle Mexican Grill is a stock, the most recent quarter, we loved it into earnings. We said if you're going to take a shot, buy some options. Stock's trading at 182, 183. I buy the 170s. In the money by 13 bucks. I paid like 15 and a half, 16 bucks from. Stock works out. Next day, those 170s that I picked up, they're at $40. It's a nice move. 17 to 40. It's 150%. Some of my subscribers chose to roll the dice a little more. They bought the $200 calls, which were out of the money by almost $20. They bought them for 50 cents. The next day, they were at $8.50, $9 a share. I have a couple of my subscribers that ended up making almost 2,000% return in a couple of days. So it just depends. Home run, 2,000%. That's a beautiful thing. But if this company didn't knock the cover off the ball, maybe the stock only goes up 6-7%, there's a very good chance they wouldn't have made any money in their option. Whereas I still would have made money in mine because I was in the money. So you have to decide if the premiums, if the time value is too much, maybe you don't swing for the fences. Maybe you look to make a measly 80 or 90 or 100% on move. You sell some upside calls. You establish what they call a call spread. So in this particular example, you like the stock, you buy the 180s, maybe you sell the 200s. So you buy the 180s, they might have cost you $5. You sell the 200s, they might have cost you 50 cents. You sell them, so you bring in 50 cents, you lower your cost average. I personally wouldn't do that, but I'm using it for an example here. A better example wouldn't be a 200s, maybe the 190s, okay? You buy the 180s, let's say you pay $5, you sell the 190s, let's say you sell them for $1.50. So you buy for $5, you sell for $1.50, your cost $3.50, but your upside is capped at the difference between 180 and 190, which is $10. The most you're going to make, $6.50, which is still almost 190% gain. So there's different ways to play this. I just want to put up a couple of charts here. Salesforce.com. Salesforce.com. Where are we? 520. Right here. Company comes out with earnings on the 20th. Stock's at 79. Next day it drops down as low as 74. We highlighted it for our subscribers. Said if this thing pulls back, we'd buy any weakness. It drops down. That day it goes up as high as 84, closes at 83. That's $10. If you bought those options right, you could have made a few %. Next quarter comes around, 819. Right here. Stock closes at $96 a share. Next day, 112. That's a $16 move. an 18% move. You buy the $100 calls, you could have got them for about $2. Next day you could have sold them for about $14. 700% return. And most recently, and again, these aren't just would have, could have, should have. These are trades we laid out for our subscribers. We gave it to them right here. 11/18, November 18th, $115 a share. 2 weeks. Again, remember, we look 2 weeks in advance of the earnings. So back here at 11, there we go. Back here on the 4th, stock's $114. We started looking at it then, saying, okay, we'll start nibbling here. It pulls back on weakness, drops down low as 109, but around 111, 112, we said this is a great opportunity. Home run. Now, you don't have to sell the option the first day it gaps up, but you take some off the profit when you make, 600-700%, but you could have held it for a few days and made, over 1,000%. That's Salesforce.com. F5 Networks. January 20th. There we go. January 20th. Stock's at $53 a share. We like it as an earnings play. Next day, goes as high as 56. Not a big move, but if you played the option, you could have made money. But then it reverses and comes back down. We said on that weakness, we thought it was a strong buy. Now, you go to April. April 21st. Stock closes at 66 and change. Next day, 72, 71, 79. $6, 10% move. Nice gap up. If you played the options, another home run. 721 right here. Nice pullback into the earnings announcement. $73 a share. Next day, closes at 83, up $10. Do you see how the momentum it's giving, the percentage gains are getting bigger and bigger? Now we bring ourselves to October 26th. Stock closes at 102. Next day, earnings come out, hits almost 120. Nice solid move. If you bought the $90 calls when this thing was down here, when we started looking at it, again, we looked 2 weeks in advance. Stock was at its 50-day. We said we like this pullback. Pulled back on the Equinox news, sell-off in all the network solutions. We said it was a perfect opportunity to get long the stock at $90 and $95 a share with their earnings catalyst coming. Some of our subscribers ended up making over 2,000% in these options. F5 Networks, Salesforce, F5 Networks. I can give you a list that goes on and on. Those are the names I'm sure you've heard of. Okay, but there's other names that you've probably never heard of that we also play earnings on. Okay, a name like TravelZoo, TZOO. Again, you can go back, check this. October 21st came out with a great earnings release, but 2 weeks prior to, we said we loved the stock in here at the 24, 25, 26 level. They come out with a great earnings report, goes from 26 to 33 in a day. If you bought the $30 calls, you could have got in for 30 cents. I owned them. They went to $4 in a day. These are the kinds of returns you can make in options. Now, not all stocks we like end up having options on them. STEC was an earnings play we have. You look at the weekly chart here. I'm sorry, I typed up SPEC. SPEC is a company that doesn't have earnings. So you like this stock into earnings? We had this move right here. Stock's at $11 one day. Next day, it's almost 14 on an earnings. When you see big moves in stocks, it's usually earnings. Both ways, up and down. There's never any way of knowing for sure what's going to take place. We give you sometimes 5, 6 earnings plays in a day. Nobody could trade all of these earnings plays. I mean, unless you're a professional and you got access to a ton of money. You have a portfolio of X. I don't know what X is, but 20% maybe is allocated towards trading opportunities. Earnings plays could be those trading opportunities. You're buying these options. You got to realize going in, if you miss on an earnings play, you buy an option. If you buy it out of the money, you can lose everything you put in it. So you have to adjust the size of your trade accordingly. It doesn't take a lot to go ahead and see where if you get even 1 or 2 of these earnings plays every quarter, you can make multiples on your money. We've had many subscribers do it, but our system is not fail-proof. Okay, there will be losses along the way. You just have to know it. That's why you have to monitor the size of your trade. Read up on options. Understand options. Our earnings season is upon us. Okay, take a look at some of the ideas we're coming out with. Look at some of the option plays we're showing you, and don't be afraid of earnings. You just got to make sure you understand how to approach them. We're going to have probably a 50 to an hour earnings playbook 202 video. We've been working on it for a few weeks. Not going to share the secret, but it's going to go into a lot more detail of how to play these earnings plays. Look for it. It'll be coming soon. That's it for the earnings playbook, way to make money during earnings season video. Have a good night, and I'll see you during earnings season.